said you look at 1,600 applications a year. How can someone stand out?
The first priority has to be don't stand out for bad reasons. One email came in and the grammar was appalling. You're clearly sloppy. Don't ever send something like that to a potential investor again. I'm not going to invest in you.
Andrea Gardiner has gone from taking extreme risks on cliffs to navigating high-stakes risks in business. As the founder of venture capital firm Jelix, she now backs bold entrepreneurs with the same courage and convictions that defined her own journey.
I learned a really hard lesson rock climbing about mitigating the risks. He had a face like thunder and he was livid with me. And he just said there is absolutely no excuse for not. I had an offer from a very, very big investor in the US, 100 billion under management.
Andrea, welcome to The House Story.
Oh, thank you so much for having me.
I'm very excited to go through your background, but also drive forwards to today. You're a venture capitalist, and so I'm really keen to just understand who was Andrea as a young girl many years ago.
Many, many years ago, as it turns out. I think when I was very young, I think all my childhood and into my teens and probably early 20s, I was crippled with shyness. I was very, very, very shy. I spent a lot of time with my horse and my dog and that sort of stuff. But I was really, really shy. And I don't know that I had very much confidence, but I was very eager to learn about the world.
Shy? Where do you think that came from?
I just was. I don't know. I think sometimes you're born shy. I'm still a bit shy. I think, that I'm an introvert, and I'm one of those people that, my husband, Ian Gardiner, a lot of people know him, he talks to people and it's like putting kind of fertilizer on him. It makes him all happy and energized, whereas I enjoy it to a certain extent, and then I just get quite tired from it.
Were you typically the smart child at school, like excelled extremely well, or not interested in school? I went to a school in the country where you couldn't excel academically because that would sort of bring about social ostracism. So, it's a crap school. Yeah.
And so you didn't really want to do that. It wasn't an environment where anybody ever did any homework and people didn't really focus on the academic stuff. No one expected to do things like go to university.
Why was that? It was just the environment.
It's just very working class and, just a little country town.
Yeah, wow. Where was it?
It was a place called Mooroopna, near Shepparton in northeast Victoria.
Yeah, interesting.
Yeah.
And so did you go on to study after school?
Yeah, I just had this, because I read voraciously since I was really young, like really very, very young, well before, and I think I had quite a rich fantasy life. I was always been a dreamer, and I always wanted to make my dreams come true, not just to dream, if you know what I mean. And it was the only thing that I could think of that could escape me from the fishbowl of the little country town that I was in and get out to see the world. And I heard of this thing called university, and that's the path to a profession that provides some sort of financial security and perhaps a way to see the world. And so I decided I was not come hell or high water, I would go to university, but I didn't know even the names of any universities. And I didn't have a clue how you got there or whatever. So I did HSC like everybody else and got into university. I do remember my dad sort of doing a bit of a fist thump on the kitchen table. No daughter of mine's going to university, which is the opposite to what most parents are.
Yeah.
But he was working at a factory, and like his colleagues were giving him stick about it. Why would you let your daughter go to university when she's just going to get married and have kids?
Yeah, goodness. Yeah, wow.
But the happy outcome of that was that my father, who was a tradesman, who worked in a factory, he did HSC in my first year at uni, and then he did first year uni in my second year.
You're
he
kidding.
Kind of followed me all the way through. No.
Wow.
Because I think it just opened his eyes. It's like,
I can do
my
this.
daughter can do this, maybe I can do it too. So I was quite proud of him.
Yeah, you would be. And so what did you decide to study?
So I enrolled in law at Monash and then decided that maybe there was the risk that it would be kind of a glorified clerk and it would be a bit boring. So I transferred and I did behavioural science in the end at La Trobe University. And I actually really enjoyed psychology.
Well,
so that was great.
why law and then psychology?
Well, law, I think, because you think that's a good career. Everybody's sort of, back then it was, you know, the ideal thing is to be a lawyer or a doctor, so law, you know. But psych, because I was more interested. I mean, it just interested me, and I really did enjoy the scientific method, and I particularly enjoyed neuropsych. So and I enjoyed the science, you know, doing biology, and I enjoyed my degree. I really enjoyed it. I like everybody else was partying at university, and I went from doing no work at school because nobody did to being quite a swot at university. I really had my head down and my bum up, and I worked really hard and discovered I was quite competitive, I think, and mind you, I might have discovered that before because I used to swim and race. And I really enjoyed it, yeah. And I always wanted to be the top of the year.
And after uni?
So after uni, I worked for a couple of years as a social worker, and then after that, I climbed full time for about 5 years.
Wow.
Climbing.
This is rock climbing.
Yeah. Well, it started off rock climbing, and then the sort of ski mountaineering, and then ski racing. So I did that for about 5 years.
How did that
It
happen?
was great. Well, just kind of. Well, I was at Mount Buffalo on New Year's Eve, for New Year's Day actually, and there were all these. We were at the lookout, tourists looking down, and there were all these this incredible diversity of accents: French, German, Norwegian, English.
Yeah.
And I'm like, what are these people doing? I didn't even know rock climbing was a thing.
Yeah.
And they've obviously come from all around the world to climb these cliffs at Mount Buffalo. I found out later that was an Easter thing. You know, there was an exodus of climbers to Mount Buffalo for Easter. And it was like just a change because it was granite. Anyway, I was going on a holiday to trekking in Nepal, and I went into a climbing shop in Melbourne to buy my sleeping bag and all that sort of stuff. And I was just bowled over. There were these climbers literally hanging, you know, big posters of climbers hanging upside down on things. And it looked really scary, and I was so impressed.
Yeah.
I was like, whoa, they're amazing.
Yeah.
And the guy serving me in the shop was a guy called Kim Carrigan, who at the time was probably Australia's top male climber, and he was probably top handful in the world. But I didn't know any of that. And he was quite a character. You know, back then he was like sort of punk was sort of fashionable, and he had the big dangly earring, and he was wearing Harlequin ballet tights. This was before leggings were a thing.
Yeah.
And he's obviously very, very bright, you know, so I had quite a stimulating conversation and interaction with him. And you know, was walking, paid for my stuff, about to walk out the shop, and there was this huge poster of someone called Louise Shepherd. And she was hanging upside down on a cliff. She's the only female in all these posters. And that was like a sternum punch. That was just knocked the wind out of me. I had a totally different reaction because she was female. And the reaction was, wow, that's really blow away impressive. To, God, if she can do it, maybe I can. And which I hadn't even crossed my mind when I saw the men. And I sort of stopped and talked to him, and anyway, she was his girlfriend at the time, and she was probably similar, definitely Australia, you know, strongest female rock climber in the Southern Hemisphere, and definitely probably about 2 or 3 in the world. And I didn't know any of this, and he suggested that I go climbing with her for a weekend, and so myself and 2 girlfriends paid her to teach us to go climbing.
Yeah.
What we didn't know is that I think we were her first students.
Oh, wow.
And people go to now when they're learning to climb, they go to climbing walls, they learn how to climb, they learn their techniques, and then they sort of graduate and they go outdoors and they follow, and then later on they graduate to lead climbing and this was Saturday, day 1, 4 pitches. That's 4 whole rope lengths.
Yeah.
That was pretty. It was very unusual. I mean, people laugh about it because they thought it was hilarious. People give her stick all the time about putting absolute beginners on a 4-pitch climb. But for me, it worked so that the other 2 said they would never set foot on rock again and climb because they were terrified. Jeez. I was equally terrified, but I was really terrified, and I didn't even really understand that if I fell, she had me on a rope. I really kind of thought, if I fell, I'm dead. And there's a lot of exposure being, 200 metres straight up when you're not used to it. And I remember when we came down and I was feeling all very, chest puffed out with pride, I was looking up at this cliff thinking, oh, I climbed that. And I was feeling so proud of myself. And she just killed herself laughing. And she just said, look, you just need to keep, because I was sort of looking at all my cuts and abrasions, war wounds. I was kind of proud of them. And she's like, keep them covered up, because people realise that's just the indication of really, really poor technique.
Oh, no.
And yeah, she's made me laugh ever since, she changed my life. Climbing and Louise herself changed my life, because I'd never met a woman quite as self-determined as her. And I admired her so much because she's an incredible rock climber, but and she was always lead climbed and there were very few women around back then that lead climb, and let alone hard routes. And she's delightful, she's really intelligent and had a wicked sense of fun and humour. And sometimes I think I was like a little puppet on a string, just going with. She'd make me do silly things, and I would always do them for her.
Do you think you were quite a risk taker?
I am. I've sort of learned that I am, but I'm also I am, and I learnt a really hard lesson rock climbing about mitigating the risks that you take. So I was climbing one day with Kim. This is the guy in the shop. Sometime, quite a long time later, and I led the climb, and I got to the top. And I was very, very proud of myself. I was just really proud of myself having led this thing, because it was quite hard. There weren't many women around that had led that, were leading that hard. It was certainly the hardest thing I'd led, and I was really proud of myself. And I was, pulling the rope in as he climbed up, and his head came over the ledge, the rock ledge. And instead of like the high fives, he had a face like thunder, and he was livid with me. And the reason he was livid was because I'd placed a piece of protection, and it was solid. It was okay. But
what is a piece of protection for those that
when you're climbing, you put things like bits of equipment in the rock, and you attach a carabiner to it, and the rope threads through it.
Just in case you fall, it catches you.
And so the person below holds the rope firm in a friction device if you fall. So no more rope will go out. So that piece of protection should hold you, and you should only that should limit your fall to the distance between that piece of protection and the climber. So you should only go that far and not that far and hit the deck. So what I'd done was ignored what he could, it's a bomb-proof placement quite close by, and he just said there is absolutely no excuse for not maximising, the safety and the optimisation of your risk mitigation, the placement of the protection. And I think that's been a really driving lesson throughout the rest of my life, you know, especially in venture. So investing as early as we do, it's very high risk. But, you know, when I first started investing, I've always and continue to feel equally this acute responsibility for my investors' capital. But back then, when I was just leading syndicated investments into early stage startups, I felt acutely responsible for, I wasn't responsible for the decision making in relation to the investment, but I was responsible for putting the opportunity to my investors and them relying on the information that I gave them to make a decision. So I kind of did this really over the top sort of due diligence and analysis that was probably more approaching sort of Series A level than, you know, seed. Or pre-seed sometimes, quite often. So I think I've continued to be like that. But if something like, if there's an alarm, a red flag around something like integrity or ability to conduct decent relationships and build long-term relationships, because that's a pretty fundamental skill set, I think. You know, I would walk away from something like that because it's not worth the additional risk. So I'm a good risk taker, but I'm very. I think I'm quite careful about trying to minimise the risks.
For those that maybe don't know, can you just explain the seed rounds and how that works, just very briefly?
So in venture, like, just say you're an early stage entrepreneur, you get a great idea, you've developed some enormous, you know, fabulous technology that's solving a problem. And you just, right, I'm going to start a business. So often you then go to family and friends, you self-fund yourself for a while, or you go to family and friends, and that's called your sort of family and friends round. And then the next stage is an angel investment round where you might go to Brisbane Angels or one of the angel groups, or you might have some connections that have a little coterie of angels that invest together or whatever, or just build a syndicate yourself. And then the next level is a seed round, pre-seed round, sorry. When I first started 10 years ago, it used to be the sort of seed, then Series A, but now sort of pre-seed is what they seem to call, what we used to call seed, and seed is now sort of A. At Series A, you want to, you know, investors are looking for a reasonable amount of revenue, you know, probably $1 million a year or whatever. But at these really early stages, you're not really looking for revenue, but you are looking for some evidence of product market fit.
How do you typically, and that leads me to my question, which is, how the heck do you possibly assess that?
Well, exactly, and it is much more art than science. You know, you can't run your calculator or your software over a business that has no metrics because it has no revenue, or it has $100,000 a year at the most, or something. So it is a lot more art than science, and it's very, very importantly and critically, a lot of it is about assessing the calibre of the founders, because it's a roller coaster. It's a steep learning journey, and you want founders that have for me, I look for founders with a really voracious appetite to learn. So they need to have not only the intellectual firepower, but a genuine appetite to learn. Someone who just enjoys learning. I mean, I love learning. I get bored out of my brain when my learning curve flattens off, and then I don't perform very well at all. Because I just can't pay attention. You know, I have ADHD, and I just, if I'm not engaged because I'm bored, because I can do that standing on my head, I just sort of go, bleh. Yeah. But you do want them to be able to learn, because they're going to have to learn so much. And even though they don't have to learn to be an accountant or a lawyer or a marketer or a salesperson, well, actually, they probably always have to be a salesperson. They need to learn enough to know what they need in terms of hires and building a team, and they need to learn enough to manage and build and motivate that team. and retain them.
And so that's a good point. And so if learning is the number one, what's the number two?
Well, actually, the number one is integrity.
Okay.
For me, people that don't sort of share my values around integrity, doing the right thing by people all around you, all the stakeholders, you know, that's not someone I want a relationship with. You know, I want to, you know, it's important to me that my personal relationships and my business relationships were with people that value integrity, they're transparent, they're people you can trust, and doing the right thing by others is valued and important to them. So that's probably number one for me, actually. And then there's that voracious appetite to learn. There's this, they need to be passionate about what they're doing. They need to really understand the problem they're solving. And so ideally, I love to invest in founders that have been the targeted customer, that have experienced the problem, and they understand the acute pain that they felt, and so they understand in fine detail the nature of the problem, so that they can craft a solution that's most likely to be one that's going to be attractive to the sort of target customers.
What would be number three?
I don't like rank ordering them after the sort of the integrity, because I think often entrepreneurs are quite quirky, and you know, so they have varying level. We all do have varying levels of interpersonal skills, but I do like to look for people that build long-term relationships, that have a history of long-term relationships, because they're more likely to not fall out with the founder, in which case we're highly likely to lose our money. That they know how there's ups and downs in terms of your relationship with people, and especially like your co-founder that you're working very intensely with, that they know how to listen even when all they really want to do, you know, you just want to blurt your own stuff out, but you listen, and you listen properly, and to each other, and treat each other with respect, and that way you get through those difficulties. And people that can't do that, I think, are probably generally not going to be a long-term bet.
What do you wish you could tell more founders looking for venture capital that you don't get to tell enough people?
In terms of kind of advice to them, is that what you mean? Well, I think there are a few things that to some people it's really obvious, and some people it's not. So, for example, for example, we've got a website, and you go to the website and you can apply that way. Or the best way to apply for funding with us and with most venture capitals is to find a warm introduction. So if the introduction comes from, say, another investor that I know, or someone that I know and respect, and know that they're not going to they're only going to send to me and introduce me to what they think is a good prospect. You know, even if on the surface of it looks like rubbish, you'll dig down and you look properly at it. But there's a huge volume of incoming applications. I think we're about 1,600 a year for a small team, and it's every single day. The my email box, everyone on the investment team's email box is filled up with people, you know, attaching their deck. But that's the way to do it. You know, find a warm introduction if you can. But before you even do that, look at the website, understand what they've invested in, what their investment thesis is, and if there's not a likely match, don't do it. But don't waste their time by applying if there's not a likely match. And that, you know, we're busy people, and the other thing is it doesn't feel to me very respectful if someone just gets hold of your phone number and cold calls you, and then before you've even said, hello, what's your name, they're pitching you. And it's like, well, this is not the time, because you haven't respected the process, because our process is that, and it's normal for most venture firms, it's not always the case, but our process is usually the more junior people do the first do the first round of selection, and then it gets to me when the team is really, they're excited about it and they want to really go ahead with it, and then I'll meet the founders and spend the time and stuff. But I have to be really careful with my time. Everyone's time's precious, so respect people's time, respect their processes, look at what they're likely to invest in or not invest in. Get up that learning curve yourself. Don't rely on your lawyers to teach you about terms and what the potential ramifications could be for you down the road. You've got to think those things through yourself. The lawyer doesn't understand your business, not really. You do. You understand it best. So read things like The Secrets of Sand Hill Road first, Scott Cooper, and then there's the Bible of Venture Deals by Jason Mendelsohn and Brad Feld. But I'd read them in that order because the second one's a little less palatable, and The Secrets of Sand Hill Road is a nice, easy read. And understand the process, understand how venture works, and invest that time and effort before you start the process. And do what you say you're going to do when you say you're going to do it. If you tell, if an investor sends you some questions, put the effort into responding to them very promptly. Keep that process going, and keep the momentum up. I think always do what you say you're going to do. If you say you're going to get something back to them by a certain time and a date, make sure you do that. Do not fail to do that, because that just rattles the trust cage. Should I be able to rely and trust this person if this person can't do what they say they're going to do when they say they're going to do it? Maybe that raises questions about the confidence level that you should have in their capability and their competence.
Just going back, you said ideally try to get a warm intro. What if I can't get a warm intro?
Well, and that's often the case, and it doesn't mean that you're going to fail. So, you just have to do what I said, work out those firms most likely, or family offices or individuals that find some evidence that they might be interested in investing in the area that you're in, and write a very brief cover of about 2 paragraphs maximum, 2 short paragraphs, 1 long one, but 2 short ones probably, explaining what you're doing, why you're doing it, what the problem you're solving is, and why yours is a unique and unique sort of solution, and why it's an effective solution. But do it really briefly, and because that way we can just, if it's in the ballpark of what our investment thesis is, then we'll look further at it. But if it's not even in the ballpark, and things like even the country that you're in, it's really irritating when you have to go back and say, where are you from? Because, in Australia, early stage venture capital limited partnerships have a, 20% max they can invest outside of Australia. That sort of thing. And attach your deck. Don't add another step to it where we've got to ask you for your deck. Just attach it. And don't ask for an NDA. Look, there are rare occasions where it's appropriate, but especially for a SaaS business, any sort of software business, don't ask for an NDA because, you could imagine if we signed NDAs for too many businesses, we'd lose track of it, and one day we might invest in something that somehow breaches it and we don't really know. So most of us wouldn't, it's rare that you sign NDAs.
Do you think it matters anyway because the business is probably early stage revenue or pre-revenue? Does it matter?
I don't think so, because usually you can have the best technology in the world that's the most effective solution for a problem in the world, but it doesn't mean that the founders are going to be able to execute on commercialising that successfully. So to me, they have very little value usually. It's more about who can get their skates on and do a good job of it quickly, and grab that market share fast. Because once you've got that market share, it's a lot less investment of time and effort and resources to maintain that market share than to actually for a newcomer to come in and take it away from you.
When should I go for venture capital? Or in fact, who should go for venture capital?
I think people that I think businesses that they need capital to scale quickly to grab market share, because otherwise they'll lose the race. That's sort of the sweet spot for venture. But I think the people involved and what's important to them is also important. I mean, some people, when they realise what's involved with venture, is most investors are not going to invest unless they can have some basic protections, because it's a high-risk asset class, and they want some basic protections like, founder vesting over time. That's a really emotional thing for founders, and
What
lot
is
of
that?
so
Just
essentially
explain,
the effect of it. This is the effect of it is that you kind of, in a sense, sort of lose your ownership, and it only gets returned to you in instalments over the next 4 years. And the reason for that is that no one wants to invest and then they just leave, because we will have lost our money if it's that early on. But that is quite often quite emotional for founders that don't understand the way it works. That's the way that it works.
Okay, so someone looking to capture market share quickly is a good fit for VC.
Yeah, and I mean, the other sort of flip side too is deep tech, where you might have academics that have developed this incredible technology, but it requires a lot of capital just to develop the product, further develop the product to to commercialise it and start selling it, and to get to that point requires actually quite a lot of capital. Sometimes it's hardware, and there's manufacturing and distribution on top of everything else, and it can be quite capital intensive in the early years. I mean, I think there are lots of businesses that can can benefit from venture funding, but not the businesses that are not appropriate for venture funding are the ones that are kind of a family sort of lifestyle type business. Then venture capital firms are not going to invest in those. And the reason for that is the way venture works, the sort of founding kind of pivotal principle is what's called the power law. And rather than like a normal distribution of return, it's governed by the power law. And the guts of that means that venture capital funds are looking for their returns from 2 or 3 companies likely. And they'll invest in, say, 24 or 5, maybe 22 to 25 companies in a portfolio, and they will expect to get their returns from 2 or 3. A handful will probably fail outright and die. A handful will probably just sort of rock along and not do much, and another handful should do, maybe moderately well. But none of those, other than those top 2, 3s, are probably going to make any difference to the actual returns generated for LPs. What that means for the businesses that we select to invest in is that we need to believe that each investment has the ability to at least kind of return the fund. So if it's a 30 million fund, they want to think that it's at least going to be able to return 30 million, and that those that are not going to be able to grow that fast or that far, I don't know whether it's quite the right use of the word far, but I think you understand what I mean. They're not really venture capital material.
What do you think makes an unsuccessful founder?
Unsuccessful? Oh, I suppose it's like anything, isn't it? Not being capable, competent, thorough, research what you're doing, choose the right option, choose the best option on the information that you have, and then reassess and change. And some founders find that they get so married to the path that they've set forward that they find it difficult to change direction in response to, say, change market conditions or new information that they didn't have access to before that actually requires a change. People that can't change and change direction when they need to, I think, and be responsive in that way are probably better off in big corporates.
What advice do you find yourself often giving to your investments or your founders that you work with? Is there any one or two pieces of advice that you tend to come back to, or that you see as a common sort of a common trend across them?
There's lots, but they vary so much. Like in our portfolio, we've got several founders that have been CEOs of big listed companies before, and all the way down to academics, senior academics that want to commercialise their incredible technology. And then, like the founders of Blackbird, I don't think they've even finished school. They didn't go to uni. And, if I've got that wrong, apologies, but I think that's true. And they were just working out of a garage for a while and a shared house after that, and developed this very complex, deep technology. So there's no real blanket things that I would offer as advice to them, because they all need different. I think different advice is helpful. So for those more sophisticated founders, instead of advice, I try and just keep out of their way, because they're they're sort of riding a rocket ship, and I don't want to get in the way. I just want to let them go and do what they're really, really good at. And then others need more hand-holding, and some of them need hand-holding for a little while, and then they just spread their wings and they're off.
Yeah.
But I suppose one of the things is believing. I think the most important thing is kind of back yourself. I think that's probably the really pivotal one. Is you just have to have confidence in yourself and back yourself. And take soundings from lots of people that can help you and give you different perspectives. But ultimately, you're the one leading your company and your business, and ultimately that decision making lies with you. And then the board. Well, if you're working with a board, then you're going to have to inform the board, and you're probably going to have a huge influence over their decision making. But back yourself.
I like that.
Yeah.
Yeah. I don't think it gets it enough. What you were telling me just before we kicked off, you were telling me about the unique dynamic of where a VC sits. Could you just explain that? Around having investors and then you helping them source good founders to work with?
All right. So just the basics of how venture works.
Yeah.
So I talked about that sort of pivotal principle of the power law distribution. So the way venture works is it's someone like me, a funds manager like me, will go out, will raise funds. So we'll go to family offices, high net worths, and show them what our investment thesis is, what we're going to do with the money, and ask them to commit capital. And in turn, we then deploy that capital into investee companies and build a portfolio and work with the portfolio to provide them with introductions and coaching, mentorship work. Sometimes we're on boards to try and maximise the progress of the company and therefore the returns for the investor, for our investors. So that's the guts of how it works. And we're out there fundraising for every fund. It's hard work. We know exactly what it's like to raise funds. Raising capital, it's a lot of pavement pounding. And you've got to be able to engage investors with your passion and your belief and your investment thesis.
I was going to say, so at some point you would have had to almost be the founder raising capital for your venture capital firm.
Not almost, exactly.
Yeah.
That's absolutely what we do, but we've got to raise more usually. Raising a 30 million fund as your first raise, it's a lot. It's significant. Yeah. and being female.
Yeah, that's true. Why do you think those different investors chose to invest in you?
I think that's a really interesting question, because I came to venture, I was talking about my sort of background before, and I missed the bit about, after being a full-time athlete with the climbing and the ski racing and stuff, then I actually did go back to the law in London. I got a scholarship, commercial law, investment banking with Lehman Brothers, then built a business for the International Division of the Bank of Scotland. Then I became a mum and moved to Australia. But all that investment banking background, it was all in debt capital markets.
Gotcha.
Not equity. I really had no idea about how to invest in a startup. I had no clue. But I did have great deal flow through my husband. He has a company called Innovation Bay that he started to provide educational and networking opportunities for entrepreneurs like himself. And it was at a time where there was very little support infrastructure in Australia for entrepreneurs. And I used to go along to the pitch events, and after a while there was a bit of pattern recognition, and we invested in a company called Pure Storage, which was the first to market with deduplication software for the cloud. And the happy outcome of, we just kind of thought, we don't have a lot of money ourselves, but we can't miss this opportunity. This has the potential to save big enterprises hundreds of millions of dollars a year in their big data storage costs. So we pulled together a syndicate of other people writing small checks, and Gilbert and Tobin, Deborah Johns, the partner there, were sponsoring Innovation Bay at the time, and I think they still are. I think they've been sponsoring them for decades now. All that time while I was raising capital, I had no expertise. I was only writing small checks myself because even if they were small, they were meaningful to us because, they were just meaningful to us in the context of our own financial situation, but it felt important to have skin in the game if we were asking other people to invest. So, people started, they would invest, and I think I told you before, I wrote these huge kind of offer documents that, really detailed analysis, and this is why I think there's a great opportunity. These are the risks that I can see. These are the ways, that some of these risks may be mitigated. But this is what I think the opportunity is. And over to you to decide. But I think that most of my investors really appreciated the fact that I was very transparent. I didn't try and hide the fact that I had no track record of investment. I was very upfront. And I think that transparency was one of the biggest reasons that they did invest with me, because I think they knew that they could trust me. It wasn't that I wasn't going to make mistakes. I think everyone does, especially when you're learning. But I also had good deal flow. So I think the trust and the integrity thing were probably one of the big reasons that I was able to build up those kind of relationships with my investors. And then, when we raised the fund, I think it was not long before that Ian, my husband, joined Jelix, and he's like the king of networking. He knows so many people, and I think he's quite well liked and respected in the community. And I think just sometimes I think part of it is people just like him.
Nice.
But yeah.
How does someone stand out if they're trying to get? You said you look at 1,600 applications a year. How can someone stand out?
That is a great question, and it's I think it's a very difficult one to answer. I think the first priority has to be don't stand out for bad reasons, like bad grammar. Like there's nothing more of a put off. I remember one email came in and the grammar was appalling, and most people would just go swipe no. And, I am a bit too, I kind of spend too much time doing this sort of stuff, but it was so bad. And it was kind of offensive because it was so disrespectful to be so sloppy, I thought. But it was obviously shooting him in the foot. And I just sort of sent back and I said, look, I don't have a clue what your level of language is, but don't ever send something like that to a potential investor again, because they're not going to invest in you because you're clearly sloppy. And, you know, there's all sorts of tools to make sure that you haven't got spelling and grammatical errors, or someone can look over it or whatever. There's just no excuse. And it looks really sloppy. And that person got back to me and said, oh, right, I've cleaned up my act. Now will you invest? And I'm like, no, the horse is bolted, you know. I have no confidence. So don't be sloppy. You know, so the question is, what sort of founders wouldn't you invest in? So that type of founder you don't invest in. Anyone that, for me, that there's any kind of red flag about their integrity and their honesty. You know, where the business is, as I said earlier, is a lifestyle business. It's not going, you know, we don't believe strongly that it has the potential to kind of return the fund and grow into a really large business. And those that just can't emotionally cope with that kind of feeling of handing over some of their equity to people that are going to provide funding for them.
Is that quite common? Because you've touched on it a few times.
Well, it's standard, and anyone that doesn't do that is probably not a professional investor. I mean, there are ways around it. You know, there are things like safe notes and that kind of come across from California, really.
No, I meant like the founder's been quite emotional about handing over a percentage.
Oh, I mean, I would be.
Okay.
You know, if it was me and my baby, I mean, I had an offer quite a lot of years ago, must be about 5 or 6 years ago, from a very, very big investor in the US. I mean, really big. I have $100 billion under management.
Wow.
And he made an offer for 51% of my company, and I couldn't. I mean, it was quite a good offer.
Yeah.
But I just couldn't hand over the control to someone I didn't know well enough to be absolute. You know, it was my baby. So I understand it. I really understand it. But if you want to grow, like Jelix would likely be a much bigger firm with a lot bigger FUM if I had taken that offer. No doubt. Do I regret it? No. Jelix is smaller because of it, I have no doubt. But the business is run the way I want it to be run, according to my values. And I feel proud of that. And that's important to me.
That's a good way to go into my next little piece, which is just some rapid questions. Favourite holiday destination?
Aspen and Chamonix.
Where?
Aspen and Chamonix, because skiing.
Yeah. Oh, okay.
The
yes.
mountains.
Yes.
I love the mountains.
Yes.
Yeah.
Favourite book?
Oh, there's too many. When I was younger, I used to always think Anna Karenina was the Ants Pants, because I loved the way Tolstoy wrote. I think he was an incredible writer, and he could just paint a whole picture in a sentence. So I love the way he wrote. But there are an awful lot of other books that I've read over the last year or two that I love too.
Last one. The greatest lesson that's had an impact on you in life so far?
The greatest lesson? I think the lesson learned is, you know, if that door closes in your face, you've got to, don't give up. You've got to work out a way to walk around the side and climb in the window.
I love that. Andrea, thank you so much for joining us.
That's my pleasure.